Good morning, good morning. Hey, AZS, how you doing? Good morning, everyone. Happy Monday. Hey, Peter, how are you? Hey, Kevin, good to see you. Hope you had a good holiday. Hey, Moran. Welcome, everybody, to the tradingsyndicate.org. I'm JJ vwaptrader1 on X, and we are watching the E-mini futures. And overnight inventory is short, and we don't have a correction, which is something to note. So at least 70% of the trading is underneath Friday's close. We're underneath Friday's close, so we're going to open on a gap down. How's that? How do you like them apples? Now, this structure here is from Christmas Eve. It was a shortened session, so I'm expecting, quote unquote, the market to come down into this 69.23 level. That's the last sort of major cost basis before the move up into distribution. So we're having a sale now, right? The product is on sale, which is good because I've been telling you guys for days now that break of 69.73. Now that we're underneath it, we're under 36, we're under, 63, we're under 53. We're finally getting some liquidation. Now there is a gap here. So if we start taking out 69.20 and 69.13, if we have a big move down, target the gap, okay? And I'll have those levels for you in just a second. And welcome to the folks on YouTube. Good to see you. So this is nice. We're finally filling in this bad structure. There is one little single print here. So there is a short position underneath 69.44. We've taken all the lower stops, which is really nice. It's good to see a liquidation, right? Markets are much healthier when they liquidate. We haven't seen a liquidation in a while. So now remember, tomorrow is month end. The 31st is market maker month end. And year end as well. So it would be nice to fill that gap before the end of the year. If we open underneath 54 quarter, that's where those single prints were. We are going to, I'm just going to leave them here just to show you. We do have single prints to the downside now, right? So what that means is this is excess supply. So if we do get a rally move back up, look for selling at 53. That's what that means, really. It's really simple. You know, market profile has been grossly overcomplicated, unfortunately. And so market profile, let me get back to it. Market profile is a map of the city. Okay? So now if you know where the stops are, say you're short, you know that you should be maybe doing some covering here and here because there'll be competitive buying. Okay? Now, we use the 1 minute chart, which is basically a map of the neighborhood you're in. So what the 1 minute chart is, it's going to this area and we're zoning in on it so we can actually trade if we have to. Right? Hey, Zeth, how are you? Hope you had a good holiday. All right, Kevin, Ronan, hi guys. How are you doing? Good to see everyone. So let's see how the cookie crumbles this morning. Right. For those of you who are trading the silver contract, I've got some levels here for you guys. You can clearly see that there was a seller up here in that 75.5 area, and the market, has been liquidating pretty much most of the morning. There is a gap here that filled, and there's a cost basis right here where time and volume traded on the 24th. So for those of you silver bugs, I looked at it this morning at around 5 o'clock in the morning UK time, and I was like, holy cow, this is a really, really thin market. They were like the order book, there was like nothing in the order book. I was like, ugh, I don't like this. I don't like thin order books. You go, that's not my gig. And thank you for asking people to like and subscribe. We appreciate that. It feeds those YouTube algorithms. So we got sellers all over the place this morning. This is good. This is healthy. Markets need to liquidate. Two-sided markets are essential. Think of it as colonic health. Right? You don't want getting too plugged up. And we almost came to the all-time highs. We came to that close to that 7,000 area. We were about 7 points off on Friday. So that's good enough for now. Yeah, Christmas rally, it was like a markup more than a rally, It was more of a markup more than a rally because there was no volume. And it's very easy to mark up price when all the sellers are in St. Bart's, right? Or Aspen or wherever the heck wherever they hang out. All the places that we don't get invited to. Yes, we are correcting inventory from last week's markup. Finally. It's a bit of a sale, right? What was it? The blue light special at Kmart? Attention shoppers. For the next half an hour, maybe an hour, ES is on sale. Get them while they're hot. You didn't want to pay $69.80. You didn't want to pay $72. Guess what? We have ES on sale for $69.48. Limited time only. Right? Come and get it. Right? It's a market. Right? And these are just sales charts. Right? It's just this chart is telling us on a 1 minute scale how sales are doing. Right? We also have 5 minute charts and half an hour charts. And, they just tell us how sales are going, whatever time frame you want, right? So the 4 hour, I haven't looked at the 4 hour in a while. I think under 69.51, we're going to target, I would say we're going to target that area around 69.35 and 3/4. I'll show you what I mean here. There's a little bit of a position. There's a little bit of a position here. Right? There's a little position as we're coming down. They should kind of slow down as we get into the 30s. Okay? That's our 4 hour chart. Hey Raj, how you doing? Wasn't it Blue Light Special at Kmart? I remember when I was a kid, I got a really cool remote control airplane on one of those Kmart Blue Light Specials. I was in Los Gatos, California, in that area. A fond memory. Visiting my rich relatives. And my poor relatives lived in Compton in Los Angeles. My rich relatives lived in Saratoga, Los Gatos. Nice area. It's like, why can't we live here? Let's see what happens. Yeah, good old Eddie Lampert, eh? Kmart, Sears, the curse. Right. Well, you know, the private equity guys are doing the same thing now, right? Oh, damn it. I don't know how those Sierra chart sometimes just baffles me how you'll drag a line over and it'll just disappear on you just like it did. Alrighty. Taking out those lower stops. So my levels this morning were 76.5 to 80. The discount zone is 2 times discount down to 68, 4 times discount down to 51. 8 times discount will take us down to 69.17. Oh yeah, Kevin, I'm old. Right? As they say in the UK, I'm a geezer. But I don't mind. Putting in a new low. You're older. Yeah, in the UK, I'm known as a geezer, especially in Liverpool. So our volume point of control is up here at 64, and it's about 2,277 contracts. So this is good liquidation. Really, really good. You set levels every morning. Do you see consistency in price level height? I do see consistency in price levels. I don't know what about height. Maybe you could kind of maybe explain that. Nice work, Jem. The turkey is wearing off. Turkey's wearing off and you're back on it. Good stuff. Beautiful trade. Right? 4 points on 3 contracts. I'll take that all day, every day. Right? 4 points on 3 contracts. That's beautiful. Right? You know, 4 points on 1 contract is $200. Right? On 3, you know, that's a $600 trade. Right? I'll take that all day. I'll take $600. I know you guys are too snooty to take $600. I'll take $600 on a trade, and I'll say thank you, right? What margin is appropriate? Well, some places charge $300 to $400 margin per contract. But you got to remember his risk was tight, right? It's nice when you can trade and your risk, which is your business expenses, if you can manage your business expenses, which is your risk, which means you take intelligent trades. You only short when you see there's a seller. You only go long when you see the seller is done, right? Yeah, it's easy to get blown out of a $500 contract when maintenance is 20. This is kind of this is what I'm trying to teach you, Chris. Right? If you guys actually would, excuse me, I mean, I don't mean to be rude, but if you guys would actually stop and listen to what I say, right? Instead of coming up with all these phantom issues, how many of my guys in my coaching class have been blown out on a $20,000 loss or a $500 loss, right? So if he was short at 49, right, his stop would have been at 51, right? Hey, Kieran, good to have you back, right? If you guys actually would listen to what I say, you wouldn't have all these kooky questions, right? I'm not telling you to take on 3 contracts with no stop. You have to have a business reason to be in the trade, to take the trade, all that stuff, right? If you don't have a business reason to be in the trade, you have no business trading. It's pretty simple, right? And if your business reason goes away, that's why you have a stop. Right? See, you want to know what it takes to be successful in trading? You got to be able to pay attention. Right? You got to be able to pay attention. On these streams, I see where you guys, people this morning, they were asking me all these questions about market makers and their short inventory. And I was like, who cares? What's your setup? How are you going to do business? Right? Right? How are you going to do business? What's your business plan? I don't know. But I'll talk about market makers all day. No. Focus, you guys. Don't be stupid, dumb money. Right? Don't get into that trap. Right? Kiddo, you're ask me a question about trading and I'll be able to help you, man. But you used up all your questions this morning. Okay? You asked a bunch of questions that were completely irrelevant. So you come up with a good question, I will give you an answer. Okay? So tell me what you're dealing with in a trade. Don't start talking about market makers and all this stuff, right? When the time and volume point of control are far apart, it just means there was time spent at the top of the market and then you're liquidating. And you're looking for that time point of control to move down. You don't want to spend too much time thinking about that. Remember what I said this morning? Kiddo, let me ask you a question. Because I answered a lot of your questions this morning, right? When I answer a question to you, do you actually pay attention or you just go on to the next question like you're on like some sort of Red Bull merry-go-round, right? I don't mind answering questions, but you already know the answer to that question, okay? Okay, folks, let me tell you, the folks on YouTube, right? The folks on YouTube who don't know how I operate, my goal is to try and get retail traders dumb money. I'm trying to teach you guys how to make a living and take good trades that are based on common sense and decent business setups, right? So I'm not going to talk about market making and delta and all this BS that you guys love to talk about while not making any money. I want you guys to make money, right? I wouldn't do this if I didn't give a shit, right? I already know what I'm doing. I've been doing this for 34 years. I'm trying to help you guys. So when you ask questions, try and make it relevant to how do I trade this? What should I be doing? What should I be looking for? Right? Where's the setup? How are you going to execute? Because I can tell for a lot of your questions that you guys aren't even trading. You're just kind of watching and screwing around. Right? And if you are trading, God help your accounts. Right? Learn the business. Come to our room. Don't be cheap. Spend the $20 and learn the business from somebody who's taken 200 companies public and actually gives a shit about your well-being. Right? Right. I'm here and I do these things on YouTube. Right? Do I want people to join the room? Yes. Am I getting rich off the room? No. Right? Yeah, retail should be concentrating. How many of you retail traders make $100 a day every day and keep it for 90 days? Probably not a lot. Right? If you can't make 50, $100 a day and keep it, you got a problem. Because you're looking to make 5 grand in a day and you have no right to make 5 grand because you don't know what you're doing. Now I know that's unpopular, but my gosh, it's about time somebody told you guys the truth. Right? Chris, I'm not going to argue with you, man. It's not 1250 a contract on a micro. Right? So I don't know where you're trading, but you can find someplace cheaper to trade. Right? You need to find someplace. If you're paying too much in commission, there's lots of cheaper places to trade. What's the micros? What 79 cents round trip in most places? Right? And on these streams, I'm always gonna have some smart ass going, yeah, but yeah. Stop making excuses. Right? You got one mouth and two ears. Maybe use your ears for a little bit. You'll be surprised at the results. Right? Yeah, so you made what? $600 trading jam and you spent $12 in commissions round trip. Yeah, that's a lot of commission. You guys got to get real. Stop lying to yourselves and making up excuses. Right? Yeah. Big commissions. Right? So my New Year's resolution is I brook no bullshit. So if you come onto this stream and you start wanting to argue with me, it ain't gonna go well. Yeah, that's why you don't take too many scratch trades. And you trade with the micro. And I know for sure you're not paying $12 round trip on a micro, Chris, because if you are, you're full of shit. So, Chris, you keep asking questions trying to derail this. Why don't you just watch and listen for a bit, right? Right? And if you haven't calculated the cost of doing business, you should maybe calculate the cost of doing business. Hey, Patty Lou, how you doing? Beautiful stuff, kiddo. Keep that $40 now. Don't go spending it all on some fancy stereo. Okay? Right, these streams are free. And let's see where this thing opens up. I think it might be a little bit choppy on the open. Hey, Raj, what's up? Did you clean out the garden shed yet? You got that all done? It's not much of a vacation when you decide to do all that housework. All right, so as we open, we're going to look for those sellers at 53. Look how they printed the 53s and they didn't even move. All right, so off we go. Last couple of days of this year. Let's go find the bid. We know there's a seller at 53. Now let's see where the buyers come in, okay? Let's see where the buyers come in. All right, we know there's a seller at 53. This is the chop I was talking about off the open. Just let that settle in. It's like an old car when it starts up and needs to warm up. Now, if we take out, see, there's a seller right there, right at 51. Let's see if we can hold the open. Right, if these sellers here, if they see buyers, they will lift their offers into the 54, 55 and a quarter area. Nope, seller's still there, right? See it plain as day. Plain as day. That seller has been there. See, look. Pay attention. The seller was here, 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 here. That's size. That's competition. Let's see if we can lift that into a 54 print. Let's see if we can print 54. There we go. Right, so we're running out of supply. We go into the supply box to get it. But they're still selling, right? We looked above that 54 and came back in. Now let's see where they bid this thing, right? So as the market comes down, you're looking to see where they stop selling. If they stop selling, say at in these areas, you can take a little long because remember, overnight inventory is, so we're above where the sellers were. That means the position is here. Right? If we can stay above 54, we'll try and take that and sell it up here. Right? And if that breaks, look for bids at 51. See, there's still sellers here. Right? We got to clean them out. Once we clean them out, if you're long, say 54, 53 and a half, 54, I got a sell order out at 55 and a half. If it doesn't get taken, I'll sell the quarters. Right? I'll sell the quarters. I don't care. Right? So when a market first opens, I'll trade the micro to get a feel of it. Now this last trade, I only took one trade this morning in Globex, and I did that with 6 minis. But now I'm being cautious because I want to protect the money I made. Right? And you want to sell into that strength which is caused by a lack of supply. Right now, the business reason for taking the trade is that we cleared out the inventory underneath 53. But I can see that there are sellers all the way up here. Right? I don't have a reference in between the top of that candle and here. So I know they're going to be sellers. So you will sell into the strength, right? And if you're long 53 half, 54, take a couple of points. I know you all want to make hundreds of millions of dollars, but learn how to make 50, $100, right? So we ripped through there. We cleaned out those singles. The next upper stop is 60. We are going to have a little resistance at 58, and 60 is good old VWAP. Right? So this is why I was trading to the long side, because inventory is short, and I see bids coming in over 51. Then I see the candles. Look at the candles. The lows are getting higher, which means the bid is following the offer up. That is information you can use. When you see the bid following the offer, that means buyers are chasing sellers as sellers raise price. Which means sellers don't have to discount their price. Remember, it's a market, ladies and gentlemen. It's a market. That's why they don't call it the stock hot tub or the futures refrigerator. It's a market, right? You acquire goods and distribute it for a profit. Sometimes when you acquire those goods, the buying is crappy and you have to discount your goods. Simple, right? We want to make the analysis simple because trading sure as hell ain't easy. You know, trading is not easy, but it's simple. So if we can keep the analysis simple, then we can focus on execution. If you can focus on execution, there's VWAP. Hello. Those of you who are still long, let's see if we can crack VWAP. Now, if enough knuckleheads shorted this thing under 57, right, they are going to realize that they have to cover and will push over VWAP into that 63 3/4 level. You see that? Hope you guys could see that. Beautiful. Right? These big green candles are the shorts who are short underneath 58, 57 going, oh, crap. They all come to buy, and the offers just magically go up. That's one big green candle indeed, Howard. Right? This happens every time a market liquidates. You've seen it. There is a counter auction. Sorry, let me get rid of this. Right? There is a counter auction. Now, remember we opened on a gap down, but there's going to be some selling at the top at where this gap fill is. Right? Because everybody and their dog should be selling this area. Why? Because if you were long 55 and you weren't selling 68, right? Right. What I'm trying to do, kiddo, is I'm trying to keep the discussion on point because there's a lot of people in my room who've paid, and then I'm trying to help you guys on YouTube. So, you know, you don't need to worry about what the market makers ate for breakfast, right? Just worry about your trade setup. How are you going to do business? Keep on point, okay? Don't worry about a lot of, and then a lot of that market profile stuff. God love market profile, but I tell you, man, you can waste a lot of time on market profile and not make a dime. I am living proof of that. I love market profile and I love what it's taught me, but geez, you can waste a lot of time on market profile, right? And it doesn't pay. That's why I use the 1 minute candle chart because it helps execute, right? And execution is the only thing that matters in trading, right? Theories are great. Everyone's got a plan until they get punched in the face, right? Market makers don't eat Wheaties. They feed off the blood of people. Just kidding, just kidding. Market makers are all computers now anyway. So they're all just computers. It's all computerized. But the business never changes, right? Get supply, sell supply. Get supply, sell supply. Right? It's all we do. Okay, now they're going to backfill, right? We hit 68 on the upside. Ah, close. Right? What did we hit on the upside? 67 and 3/4. Okay, so if you're short, look for some bids at VWAP because there will be bids at VWAP. There they are. Right. And if we break VWAP, you're looking for about a 58.59 cover, right? This is called shorting the backfill for those of you who are shorting this, right? You short the backfill when they put the market on sale, right? It's very handy. Right? Exactly, Raj. We're tap, 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 find that bid. Just to look below and fail. Do you know that, kiddo, that you can go from learning how to do the look below and fail, making 50 bucks here, 100 bucks there, perfect that trade, and it works on every time frame. I've got buddies of mine who use the look below and fail. They make 20, 30 grand a trade. Some of them make a couple of hundred grand a trade using larger time frames. The mechanics and the business of the trade are the same, right? So you learn how to do it on smaller time frames, and then as you progress and you gain skill, right? Now, you'll say, why don't I like shorting? Well, I don't like shorting in a market where there's limited supply, right? Now, if you saw a seller at 68, 67, 66, you can short, right? See how the candles, the tops are getting lower and lower and lower? Oh, there we go. Yeah, the silver market's got to come off a little bit. That's okay. Little ebb and flow. And like I was saying, the short squeeze this time in silver, you don't have Nelson Bunker Hunt and Lamar Hunt loading up private planes full of silver and flying physical silver to Switzerland. So it's a little bit different, right? These guys were animals. You're pretty effective when the exchange changes the rules around your trading. All right, back under 58. We're coming down to that point of control where most of our inventory is priced. And if that breaks, check out the open. Edmund Fitzgerald, you are right. The top and the bottom of the candle, right? Bingo. Nailed it. Because if you've ever been the top of the candle, you'll know that you will have competition and you better get your product out. That's why under VWAP, back down to 53, 54, right? Those of you who are short, right? The levels are working. We went to 67 and 3/4, one tick away from my target. Right back down. Let's see if we hold 51 now. Right? See how we came down to that area? Remember the position? Those of you who are paying attention, the position's here. We took it, we sold it, we put it on sale, right back to your cost basis. Right? So if you were short, you should have been covering. Right? If you were short 63, 59, should have been covering into the 55s and the 54s. I told you guys to look for bids. Um, I Herbie, what I like to do is I like to wait for the market to go under a level and come back up at the edge. Now, it's not a bad trade if you were able to catch 54 up to 56, 57. There's nothing wrong with that. But I find that if I try and trade in between, I'll overtrade. So, especially on a Monday, what I like to do is I like to take the ones like when it comes underneath and comes back up, then I can take that trade. I know that this is at the edge of that zone, right? Right now we might get a rotation and right back up to that 60 VWAP. And see, we're getting a rotation within this zone, which is okay. It's a nice zone, 51 to 68. There's a lot of meat on the bone there. And Herbie, it's very different in all different types of market conditions. So it's kind of slow right now. It's really not that volatile. So watch it come down and take out that 53. Right? Let's see where the bid is. We're looking for the bid now, right? First we found the bid at 42. Now, sort of 20 minutes into the open, let's see where the buyers are. Yeah, and that's the hard part, to wait until that 51 is tested. Because everything in a human being tells you to jump in now and try and catch it before it breaks. But what usually happens is if you buy it here, then you get stopped out, and then it comes back and the trade works, right? I mean, how many of you has that happened to? It's happened to me, right? You go and try and front run a level and see how it's see how the bottom of that candle has not transacted at 51. So that's a sign. But I know that we've trapped all these people up here, so let's see. I would rather take the trade long if we get over this white line. Because if we can get over that white line, then we'll flush out all those sellers. Right? That patience part is the hardest thing when you're first learning. So I got to be honest with you, when you're doing this, you're going to screw it up a lot of times. And that's why we tell you to use funded accounts and trade the micro. Because over time, Herbie, you're going to build up a database of price action in your head. Right? And you'll be, oh, I've seen this before. Maybe I should wait. Or, oh, crap, it's going. I got to hop on. The difference between maybe I should wait and, oh, crap, it's different is about 1,000 trades. See, now there's that long from 54. You're selling the 56 3/4. You know that there's going to be a seller here because they were here before. They'll most likely be there again. As someone who has sold more stock than McDonald's, has sold hamburgers into the U.S. markets, I will tell you that if I'm a seller there before, I'll be a seller there again. Yeah, Raj, that's interesting. I didn't look at it that way, but remember, Raj, 1 minute chart, 1 minute chart, 1 minute chart. The singles are done and gone, but you were right. They are transacting in there, right? See how we got to 58 and there was a seller? All the way back down to 55. Right? Pay attention to that. That is what's going to make you money. Because if you were long 54, you should have been out at 57. Right? Because that's 3 points on a mini is $150. On 3 contracts, that's $450. And if you can do $450 a day, you can pay your bills. Right? You don't have to look for 30-point moves. And you guys can't trade 30-point moves. You don't have the skill to do it. Nor the account. Right? But there's no shame in making $400 or $500 a day. There's no shame in that. And once you guys come to terms with that, it'll change your life. Here we go. So we're breaking through that 51. We're going to come and test that A low. And in this market, I think it's healthy that we go test the overnight low. Let's go see what's lurking down there. Let's see what they got in the tickle trunk. Here we go. Right? So on the second liquidation down, right here, I'm not likely to take a long. I will let the sellers wear themselves out. And once again, I'll only go long once we take out this white line. Right? See, there's that seller at 53 again. Right? They're in goal. Right? Just like Ken Dryden, Montreal Canadiens. I know my hockey references are 40 years old, but that's all I got. So when it's like this, give it some time. Let them clean this area out. And let the large traders work out the order flow here. Once you see it show signs of life higher, see now it's offering over 54. You got 10 seconds left in this candle. Just be methodical about it. Sometimes, yes, sometimes you'll get a big buy order and you'll miss the trade. That's okay. There's always going to be another trade. Right? Yeah, let the big money work out those really nitpicky levels. Right? It's like when you go for dinner with a friend who's just made $100 million on a deal. When the bill comes, you get alligator arms and you let him pay the bill. right? Certain areas in trading, you let the large traders work out. You don't need to be putting your money down at 51. Go 53 and a half, 54 long, up to 57, 58. Make your paper. You know there's going to be a seller there. There they are. Right? Now, if you find this hard to follow, it's because you've been overcomplicating your analysis. Right? You knew that there was going to be a seller there. I marked it hour and a half ago. Right? Every time we come up there, boom, they're waiting. Yeah, and now my market profile nerds are going crazy about this area, right? Because the single prints were going back and forth because there was supply there and it's coming in, right? So, but if you just want to focus on your trade, just focus on the 1 minute candle, right? Because that's where your execution is, on the 1 minute candle. See, when I first started, I never traded candles. But trading market profile was a lot easier in 2015, 2016 because the levels and the ranges were a lot smaller, right? The ranges were a lot smaller. Now when you got an 80 point, 120 point range, you're going to have to use those candles to cut up the pizza into digestible slices. Think of the day's range like a pizza. You can't just stuff the whole pizza in your mouth. You got to cut her up. All right. So let's see if we can hold 51. We're just going 51 to 55. 51 to 55. Candles are starting to have higher lows, excuse me. But there's not much follow through. Not much follow through. Give it some time. Let them caramelize the onions. Okay? Alrighty. A couple of minutes till the next period. Let's see what they've got. Remember, I do try and wait a few seconds to see if a bid holds before taking the look below and fail. Now, sometimes algo interest, I'll miss the trade. Right? If you get a big buy order and that candle just pushes up and you'll be waiting and you're like, damn, you miss it. Right? But in a slower market, I like to wait a little while. I don't want to be the first guy through the door. Right? Remember, in trading, a hero ain't nothing but a sandwich. Right? You don't have to be first. Let someone pave the way for you. Cut through the bush. And trust me, that look below and fail trade, I've screwed that up so many times. Learning it. And you will get stopped out. That's why when you take the trade, your risk is very minimal. Because the business reason for taking the trade is that the sellers who took it underneath are completed, so you get that rotation up. So you put your stop there, right? See, now we're underneath 51. There should be sellers here. They're all trapped, and now they're going to start to liquidate, and we'll look for this 46, 47 level. But if we crawl back up over 51, we found some bids at 49. And you'll get used to this. So what you want to do is you want to build up that database of price action in your head. So you start understanding the business reason why you're taking the trade. And now, does the business support the trade this time? And that's not easy. That takes time and patience. And that's why we tell you to journal your trades, right? The other thing that's really helpful is to use chart replay. So if you miss a trade, right, you can use chart replay at the end of the day and replay your charts. You know, just like in football where you look at game film, right? You want to see which way that guard pulls or which way, you know, where's that runner going to be? Right? You want to use that information. You want to do, you know, you want to watch game film. That's why I like Sierra Chart. It's got a beautiful replay function. You can speed it up, slow it down, fast forward. It's great. Right? Most trading chart systems have a replay function, if I'm not mistaken. See now, see how there's that 53, 54? Those sellers are still there. They're not going away. They're not going away until they see that people are willing to pay a lot more. And once people are willing to pay more, then they're like, oh, okay. You know, let's see if they'll pay 55. Let's raise the price and see. Now, of course, this is all done electronically now, right? And it's way more efficient than it's ever been in the history of finance. Right? Don't be upset if you miss a trade. Don't be upset if you get stopped out. It's part of the process. Being stopped out just means it's a business expense. Make sure you keep your business expenses small. And if you're worried about commissions, then don't overtrade. Right? But you gotta practice. Practice, 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 practice. Right? And that's why funded accounts are great. You know, because you can practice those evaluations, you know, get up to speed. You really want to learn your craft. It's essential that you learn your craft. You'll be much better off for it. Alrighty. It's kind of choppy and slow now, eh? That's okay. I want to see if this 45, 44 area holds later in the session, you know? How many trades do I take in a session? I do 2 to 3 warm-up trades with the micro. I always do the same thing. I do the same thing every day. I do 2 to 3 trades using the micro to see whether my brain's working and whether I think something is happening is actually happening. Because, you know, we've all made, oh yeah, this is a great idea. Then you go, oh crap, that didn't work. Right? We all have that. Right? So I'll do a couple of trades using the micro to see whether or not I'm in tune with the market. So if I get stopped out, you know, I'll lose 20, 30, 40 bucks. Now, if those go well, I usually like to do 2 to 5 trades a day, depending on how good business is. Right? If business is good, I like to do 5, 6, maybe 8. But if business is slow, I'll do 2 or 3 trades, sometimes just 1 or 2. If it's really slow and I can get in, make 500 bucks here, 300 bucks there, done. Right? I'm perfectly happy with that because I'm going to come back and do some business tomorrow. It is a little slower right now because our friendly neighborhood shorts are trying to cover. The wholesalers are seeing that short bid, so they're trying to take advantage of it. Of course, who wouldn't, right? So the shorts are trying to cover because year end is here, and that gap, remember there's that gap underneath us that still hasn't filled? Right? There's that gap and it hasn't filled. And it's causing a lot of problems. People are not happy with that gap. So everyone's trying, everyone who is short, right? If they were short through rollover and all of that and they stayed short, they're cursing that gap, right? Let's see if that gap will fill. Very curious. Very curious. We need a good, strong bunch of sell orders to come in and try and knock this puppy a little lower, you know? Liquidation is good for the market. It's healthy. Here we go. It's getting a little slower, definitely. Okay, that's a poor low. That's still a poor low. Come on. I want to see what's lurking at. If we could take out that overnight low, that would be very nice. Because that overnight low is kind of like our piñata low. See how on the market profile, that's important. There's a poor low. That means there's competitive bids down here. So do you know support is created by unfilled bids, right? So there are unfilled buy orders here. If those buy orders get filled, then we'll drop lower. Poor low corrected. Good, good, good. Follow through selling. Always nice to see. Now, I'm a little short biased here, so I'll say it out loud. I think we're going to take out that 42. I could be wrong. I'm kind of hoping we take out that 42 because I want to see what's lurking at 69.33 and then right around 69.29. I'm curious what lurks underneath there. See how slow and measured the selling is? That's that constant back and forth, right? Because the buyers are the short. See, look at that. Now see there's a bid. So the other thing about electronic trading is the order books are so responsive to input volume, which means there'll be sellers, 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 and then as soon as they sense a big buy order coming in, all those offers will just evaporate and the market will spike like it just did. I don't like trading price discovery, right? That's why God invented billionaire hedge fund managers. Let them let them do price discovery. Once they've discovered the price, then I'll take the ride. You guys get what I'm saying? You understand what I'm talking about? So there are certain times where you don't do business because it's unclear, right? You don't do business because it's unclear. You want to wait till a clear business proposal is in front of you. That way you can manage your risk and you're not just flailing about, right? So now you can see that there's a seller here. Check it out. See, you can see that there are sellers here. The top of those two candles, that's where the sellers are initiating. So the next candle is going to open in 22 seconds. When it does, will the low of that candle be down underneath 46 and 3/4? These are the things, practical information. Everything we do in our trading room is based on practical information. So if you do join our trading room, there will be no gibberish, right? Stuff that you can't figure out. We'll tell you where to take the trade, where to put your risk, and why. If your trading educator cannot tell you the business reason for the trade, they don't know what they're talking about. If your trading educator cannot tell you when to trade and when not to trade, they don't know what they're talking about. I remember when I first started trading futures, there was some dude who used to work on the floor who was charging retail traders, I think it was $2,000 for 3 days, or a 2-day trading course, and he was charging them $3,000. And he would tell them it's okay to lose $300 a day. You have to lose $300 a day. And I was like, huh? What? Suffice to say, he had a beautiful collection of classic American muscle cars. We all know who paid for those. I don't know yet, Howard. I still think we're looking for the bid. So what did I just say? Remember, Howard? What was I just saying? What was I talking about all now? Right? Just be patient and wait until they find the bid. There's no setup for you right now anyway, right? There's no short setup. There's no long setup for you. This is price discovery. Right? Let them discover the price. You let them pick up the bill. Be cheap. Right? This is where you put your hand on your wallet. Okay? You're walking down a dark alley in a bad part of town. Right? You get it? Put your hand on your wallet. Remember how we spoke about respecting the money. This is exactly one of those times where you want to respect the money. Well, because it's nowhere near an edge. X-Rebel, the very, very simple way to know whether or not you're in price discovery, there's the overnight low. Are we going to break it or not? We have to discover that, right? Do you want to be involved? Do you want to donate your money to the process of finding out where the buying is? Because we'll gladly take your money. Inventory adjustments work on every single product where there are large size traders. Remember, every market is built for distribution, right? This is how Wall Street works. Okay, you've heard of investment banking, right? Investment banking is where they make the donuts, okay? Then they have institutional sales, and that's where we sell the donuts to institutional clients. Then there's the traders. The traders are like glorified truck drivers who take the donuts and bring them to you. It'd be good to repair that skyhook, Pill. It'd be nice to fill the gap, at least that one gap. We have many unfilled gaps, but the most current gap, it would be really nice to fill that before year end. It would let those poor short sellers cover with some dignity, right? Because once again, over the Christmas holidays, we abuse the short sellers, as we often do, right? And the market got marked up on very, very light volume. And a lot of those folks got trapped around contract change. And then everybody's coming out saying, oh, it's got to go lower, it's got to do this, it's got to do that. Basically talking out of their ass. right? But they're not watching the chart. The chart will save you. If you can pay attention to the chart, it's going to make your life so much easier. And that goes on any time frame of trading, right? If you can pay attention to the chart, it'll totally make your life better. Because you won't be listening to all these idiots try to tell you this and that. You're going to actually be able to make good decisions. Because the chart will tell you what's going on. And if it's unclear, what does that mean? Your first instinct should be to protect your capital, right? Your first instinct. I mean, of course, if you're just going to like monkey around and do this for like, you're going to Vegas and betting it all on black, that's a different story. But your first instinct, if you're a proper business person, is to protect your capital. Right? So anytime something seems off, right? What's the saying? When in doubt, get the F out, right? Follow? When in doubt, get the F out. I like to cover into weakness. I like to short into strength. I like to short only when we have a seller. You get into so much trouble shorting when there's no seller. That's a good trade, SPIL, if you're short 54. Right? So if you're short 54, SPIL, and this thing breaks and holds 51, your spider sense should be tingling. Right? Your spider sense should be tingling. If we take out 54, well, then you're back to break even. Hopefully you've made some money on that trade. Right? Because if you were short 54 and you didn't cover some at 46, what does that guy say in Goldmember? Then there is no pleasing you. Right? Always remember that this market magically runs out of supply just when everybody gets short. All of a sudden, oh, nothing for sale. Nothing for sale in Tuscany. That's why if I was short 54, I would have had 49, 48, 46, 47 bids, right? If those bids got hit, you could, stay a little short. But if your bids aren't getting hit, that means there's no supply. Right? Now, if you're a larger trader, because he's looking to cover in the 30s, well, you got to break 42 before we can hit 30. Don't leave money on the table. Not at the end of the year. Don't be looking for home runs at the end of the year. Right? There you go. You're back to almost break even on that trade. Hope you made some money. Paid yourself. Pay yourself, people. You sit in front of these damn screens, get hypertension. Hey, at least you made 4 points, right? It's better than a poke in the eye with a sharp stick. Right? Next time, put some bids down there, brother, and cover. Left a lot of money on the table. See, the hardest thing to do is to manage your expectations when you're in a trade. Well, how do you manage your expectations? You got to use your orders to manage your expectations. If you're long and you put sell orders out and they're not getting executed, that means nobody wants to buy your product at that price. Right? And as a seller, you need to lower your price. Same thing with a short. If you're short and you put some bids down there, And if they get hit, that's beautiful. But if they're not getting hit, then you know, hey, right? So we went right to 54. See, and that seller was there again. Look, that's not magic. And do you need any kind of special software? No. All you need to do is the ability to draw a straight line and pay attention. That's all you need, my friends. Right? All you need is the ability to draw a straight line and to pay attention. And it will change your life. What do I think about BTC? I think we've got a lot of overhanging inventory in Bitcoin that we need to clean out. So I don't trade Bitcoin. I do own it. And what I do is when it really drops at certain levels and does a look below and fail, I'll buy a tiny bit and sock it away. And hopefully the 0 and 1 mafia get their crap together. And in 5-10 years, right, I can be a crypto bro. But right now, on Bitcoin, I see on my 4-hour chart on Bitcoin, every time it hits that 200-day moving average, oh, they lay into it. Right? Every time we come up over that 200-day moving average, and I'm not a moving average guy, but in this case, right, we're building a new cost basis in Bitcoin between, I'd say, 84,000 and 92. We'll see. Right. So I don't trade Bitcoin. I don't know the mechanics of the trading of Bitcoin. And I only started buying it when Hunter Horsley from Bitwise came on our Confessions of a Market Maker podcast. And he said, okay, we figured out the counterparty risk in the clearing. As soon as he said that, I went and bought some. But my position is very small compared, to, cash position and stuff. And I don't understand Bitcoin fully. I'm still learning. Right? I'm still learning every day about cryptocurrency and it's very interesting. But I was a very late adopter. Typical old guy. You tend to always see the horror stories. Okay, what do you guys see here? Do you see what I see? There's your cost basis. We're just banging around here for now. Right? Maybe we build out a nice B profile, right, which is accumulation here. It's still early in the day. Right? I will do a year roundup this week, and I'll have it out before New Year's. And what I'm going to be doing is just going over what I think is going to happen, and I'll look at the big 7 stocks, that kind of thing. And I'll do a little bit of work on crypto. Put that out there. I've got to say, I've got a morbid fascination with this MSTR. Right, I've got a morbid fascination with this MicroStrategy. Full disclosure, I don't own it. Something about this stock is fishy. I don't know what it is. I am not short. And I really hope the longs who follow this guy like a cult reader, like Reverend Sung Young Moon, I hope they get paid. But man, the chart looks like crap. It's just, I don't know. When a stock is down and a CEO is posting pictures of himself, yeah, exactly. I don't trust him. I don't trust him. He's man, that guy is dodgy as hell. I don't trust him. He just does not look trustworthy. right? I wouldn't let him borrow my car. But I hope for the longs it pays out. I really, really do. He's a good salesman, though, eh? He's a good salesman. Come on, yes, let's see if we can get over 54. There we go, 54 quarter. It heard me. Can we print a half? Come on, give it the old college try. Ooh, 54 half. Can we get a 3/4 print? Now I sound like an auctioneer. Exactly, Brad. More like a televangelist. But you got to have drama in markets, right? You got to have some drama in the market, right? There's always got to be like some guys out there, and he's like spinning a good yarn, and everyone's going for it. And for a while it works, but yeah, like the resting orders, right? Those orders are like they're having a little nap. That's what I think of when you guys say resting orders. The orders are sitting there. They've maybe had too many tacos and they're kind of having a nap. And then we come back down to that place and they wake up, right? And they start chasing the offer. So the suppliers will raise price, right? So anywhere you guys see, nobody tells you that support are unfilled buy orders. Yeah, I am, Patty. Sorry, I really probably, I'm going to get into trouble for saying it. But yeah, that guy is dodgy as hell, right? You got to remember, I had 300 clients that were some of the most sophisticated, highly functioning sociopaths, right? So when I see guys like that, and I see people believing their Kool-Aid and drinking the Kool-Aid, so we're front running VWAP right now. Okay, I'm going to shut up about that because I'm going to get into trouble. Like I said, it's a morbid curiosity with that stock. Uh, hey, nice run. If you got out at 118, Patty, that's great. That'll pay for another Tesla. Sweet. Alrighty, folks. Thank you so much for being with me this morning. Have a great trading day. Come visit us at thetradingsyndicate.org. Do yourself a favor. Learn how to trade. Learn how to make money in a practical environment. We will see you tomorrow morning. I'll be here for the Globex Open, 7:30 in the morning UK time, which is 2:30 in the morning New York time. And it's great being here with all of you. Trade safe. And remember, folks, don't take candy from strange market makers, okay? Be careful out there. Bye for now.